Hi, this is James Shug at Westpac with our end of day markets report for Thursday, April the 19th. Well, the market sentiment in Europe started off on a modestly positive note, perhaps benefiting a bit from speculation about further easing measures in China. And also the Spanish bond auction went off benignly. The target was met fully in terms of the issuance. Spain issued just over 2.5 billion euros worth of 2 and 10-year bonds, and in that sense it was a fair enough result, although the yield on the 10-year was up 34 basis points to 5.74% compared to the previous 10-year bond auction back in January of this year, and that's a further reflection of how market concerns about the sustainability of European sovereign debt positions really has deteriorated so far this year. Nevertheless, it was really the release of US economic data back in the frame again that pushed markets lower today, and the losses in Europe were actually quite significant. As I say, more due to the US numbers. I'll run through the numbers first actually. The Philadelphia Fed factory survey was down 4 points in April to 8.5. That's its first fall for the year. Actually, the lowest reading since January, so it's reversed gains since then. It's actually the fifth survey in a row, Fed district survey in a row, to record quite a significant pullback in the headline reading. We had the Richmond, Dallas and Kansas City Fed surveys for March, and earlier this week the New York Fed survey for April, and now Philly Fed today. And that adds to the growing body of evidence that suggests the US economy hasn't really maintained the momentum that perhaps it looked like it was showing as recently as just a few weeks ago. Other data today, existing home sales, they fell 2.6% in March. They've been down 3 months now in the last 4. Initial jobless claims, which is like a measure of the number of workers being laid off each week, it actually fell 2,000 to 386,000 last week, the weekend of the 14th of April. But the previous week was revised up by 8,000. And in fact, if you look at the chart of that, there's a very steep rise in claims since the end of March, which seems to suggest that the US labour market has really deteriorated. We saw that from the March payrolls report. April claims, or the first 2 weeks of April at least, suggesting that deterioration is genuine. The only other data of note today was, I should have mentioned it before, was European consumer confidence fell for the first time this year in the advance April reading. So just as we saw the bond yields higher, even consumers in Europe are feeling more concerned about the outlook for the economy that they live in. So that's the news for today. We just had Christine Lagarde, I should say, from the IMF announce various increased contributions from different countries, although it looks like their target to be raised is something like over 400 billion euros rather than the 600 billion euro target that they had a few months ago. Remember, the US is being a bit recalcitrant there, not wanting to contribute more. Anyway, in terms of the market movements, the FTSE in London actually unchanged at the close today, but the French market down 2.1%, and the German market down 0.9%, and losses of over 2% both in Spain and Italy at the close. It's US lunchtime. The Dow's just up 0.1% at the moment at 13,045. The weaker economic data has been a drag on the Dow, but earnings reports, particularly from the likes of some of the banks, I think it was BOA, Morgan Stanley, actually beat analysts' expectations, and for once beating analysts' expectations on the bottom line has actually meant those share prices have risen. So as far as analysts are concerned, the detail in those earnings reports was also reasonably robust. In terms of commodity markets, we've got copper prices today down 0.2%, oil's unchanged, $102.68 a barrel, and gold's up about 0.5% at $1,647 an ounce. And the Aussie dollar, it's been drifting a little bit lower. It's down around the low 1.9. but down a little bit from where it was trading yesterday. The data to watch for in Australia, import and export prices coming up for the first quarter, and then of course you've got the inflation numbers next week. Okay, that's it for today from me. I'll be back tomorrow.